Good evening, good afternoon, and welcome to the Accendo Trader Group. This is our weekend wrap-up trade plan for February 1st, 2009. AccendoTraders.com, effective video trade plans delivered daily. Each time we come together, we want to prepare ourselves for the next trading day, so we look at our watch list and, adjust our stops. We always want to see what's coming down the pipe as far as market-moving news. But on the weekend, we want to see what some of the experts are saying, the blogs, the newsletters. We want to check the sectors to see if there's any direction change. Always we want to look at the three major indexes, and then we scan for new trades, set alerts for new trades, and by having a trade plan we have time to spend with our family. So the week that was, we basically ended the week down for the week, not down that much, but we're going to get to that when we get to our charts to talk more about that, but we ended up down for the week. And we are basically looking at the worst January start for the year ever. We have 4 consecutive down weeks, and so as you can see, we're basically down 8%, 6% on the Nasdaq, and this is the worst start to the year ever. We started off with Caterpillar. It missed on earnings, but then it lowered its guidance by basically a half, from about 450 down to 250. They said that there's basically recessionary conditions throughout the whole world, and that they're going to cut 20,000 jobs from their payroll. And of course, that was also one of our other recurring things, that we had our job cuts announced by many companies. We had Home Depot job cuts, Target, Eastman Kodak, Pfizer. Pfizer also had a deal where they're buying another company. Sprint announced job cuts, and General Motors announced job cuts. And also this week we had, the week started off good. We had existing home sales come out better than expected, and leading indicators came out better than expected. But of course, we returned back to the same old with the bad news. Consumer confidence hit a record low. Initial claims hit a record high. Door orders fell for the 5th month in a row. New home sales fell. And then we had the fourth quarter GDP coming in better than expected, but there was a little spin on that, because when you really added everything up, they were expecting 5.1. It was reported at 3.8, but when you really looked at it, it was 5.1. So it really came in at the same. The FOMC statement that we had this week was vague. Basically, what can they do? They've cut the rates as low as they can go. Right now it looks like it's going to be up to the government. And the House did pass their version of the stimulus package, and so now it's going on to the Senate. And then on Friday it was reported that this whole bad bank idea, where the government bank would buy up all these bad assets, which was talked about, and technically was the original purpose of the TARP, but it's kind of hit a snag, and it's going to be on hold. So when we look forward to this week, as far as economic news, we do have the early predictor of the ADP on Wednesday, of the Friday non-farm payroll numbers. Those will definitely have some market moving potential. So tomorrow, personal income spending, ISM index, construction spending. We got a lot of insurance companies this week. Humana before, SanDisk after. We got some companies, not that really huge, but definitely some that can move the market. Before we look at the 3 major indexes, I want to make sure we take the time to remind everybody that in 2009 we're really going to be using Twitter to get our alerts as a part of our 30-day challenge that we have. So I want to make sure that you guys check out twitter.com/AccendoTraders to sign up to get our free alerts. So here's where we were last week, and we talked about this battle here at 8,000. We talked about that this whipsaw that we were seeing up and down was the market, the bulls and the bears, fighting over what was going to happen. And as we look at what happened this week, we did get a little bounce, and where did we come right back down to? Our 8,000 range. So we're still seeing this battle. Where is the market going to take us? Who's going to win, the bears or the bulls? We only closed once below that level in 2009. And so we'll see what happened here in I'm sorry, in 2008, what's going to happen in 2009. Now here on the NASDAQ, you can see we have just a little bit more to go to get to the lows of the year. So there is just a little bit more to go, down to about 1450, 1400. On the S&P 500, we have kind of the same thing going on here, where we have just a little bit more to go to get down to 800. So the Dow is at the pivot point, the decision point, whereas the NASDAQ and the S&P 500 have a little bit more to go. But again, what is going to be our catalyst? Is it going to be the ADP report on Wednesday, the non-farm payrolls on Friday? And at any day, we know news overrides everything. And any day, maybe they will decide on a bad bank. Maybe they will come out with more news about the stimulus package in the Senate. Certainly can move the market. But again, we are at a battle, and we need to determine which way the market's going to go from here. Okay, my initial thought on sectors that not too many really caught me because we are in this up and down move. Gold, though, still looks pretty good. Like to see it break above 400. Look at the weakness in consumer durables. Look at that. And it seems like if we break this 140 range, we could certainly come down and test the lows here. Casinos also look weak. And you know, we like win in there, so you can see it looks like they're getting ready to break lower, possibly test this November lows. And look at the weakness of airlines. Remember how we were talking about airlines on this move up? It's basically giving back that whole move. Now, honorable mentions for me is going to be internet because it stayed above the 50. Amazon had good earnings on Friday. And agriculture is going to be an honorable mention for me also. Okay, now let's move on to the education portion of our video. We're using the book Trading in the Zone by Mark Douglas. We're on Chapter 5, The Dynamics of Perception and the Power of Association. He goes on to say, one person's perception of risk can easily be perceived as irrational thinking by another. You know, and again, that basically goes to some people's hesitancy to place a trade. To an experienced trader or professional traders, you know, it's just, hey, hit the button, click the mouse. What this kind of reminds me of, I don't know how many of you guys have seen this commercial. I believe it's either Orbitz. It's not Priceline. It might be Hotwire or what's the other one? Travelocity, where they have a commercial where they're trying to train this person to click the mouse because the person's worried about a better deal coming up. And then there's the other commercial where the guy comes on that vehicle that hovers over the air and to deliver $39 to the guy who lost money. My point is this. In those commercials, they're trying to train people to stop worrying about the fears of paying too much and losing too much. And it's the same thing in trading. You got to stop worrying about whether or not you're going to win money on this trade or lose money on the trade. You got to just make the trade and go off the numbers, the statistic that you're going to win more than you're going to lose. You are going to lose. Get over it. So this risk of losing is relative because to a new trader or a trader who hasn't built that confidence, hasn't built that trade plan, hasn't learned how to succeed at trading, that risk to them is huge, and they're worried about, I'm going to lose my money. And I understand if you have a small account, you're really worried about losing your money. But you have to understand, again, that you're going to lose at some point in time, and you've got to play the numbers, and you've got to build that system to know that I'm going to win more than I'm going to lose. Mark goes on to say that your basic objective as a trader is to seize the moment, to see the opportunity and take advantage of the opportunity. And it is not to see the market as a source of threat. Remember, we say this over and over again. The market is just a system of information. It's information that you can perceive the potential to make money of. The market is neutral. It's not against you. It's not for you. It is neutral. So it's your job as an observer to see these unending stream of opportunities and enact a trade on your behalf. And when you are worried about entering a trade, you need to ask yourself the basic question is it the market that is scaring you, or is it your psychology, is it your mindset that is threatening you to place the trade? So obviously we always want to thank people for watching. To get the full version of our podcast, you got to go to accendotraders.com/subscribe podcast HTML. We're up to about 400 people downloading this free every week, so that's awesome. Our paid members, if you want to become one, it's accendotraders.com/video.html. Our prices are going up here in February, and you'll see that when you go to our link here. But we are going to have a special offer that I'm going to put out this week for our people who have been watching for years now. We're going to have a special offer for those of you before the prices go up. But the prices are going up this week. Check out our blog and continue to follow us on Twitter. Twitter.com/AccendoTraders. Trade at your own risk, guys. I'll talk to you later.